Hey, hello again, everyone. Welcome to another edition of Silver Bullion Television, SBTV. Again, this is our weekly live stream. Glad you could be here. We'll get started in about a minute and a half or so. This live stream, we're going to take a look at a few things that Jerome Powell had said at the last FOMC meeting. He's still continuing to raise rates with the possibility of slowing down, but we'll just go over what he said, and I'd like to get your opinion as to what he means when he says things. Anyway, we'll also take a look at a few articles from Gerald Celente's Trends Journal and take a review, a look back at the past interview with Warren Black. So hopefully you had a chance to watch that interview. Let me take a quick look who's out there. Neil Han Dynasty, how you doing? Peter Frowine, how you doing? Are we having fun yet? Yeah. 49 Aloha all. Hey, aloha. Yes, definitely. Let me know if you guys can. Let me know how the audio is coming in as well. James Richter, buy some silver and gold. Absolutely. Definitely buy some silver and gold. Yeah, I'll see you shortly. James Richter, Vincent for president. Vincent, you got one vote out there. Very good. Maybe I could be your vice president. I mean, just if you don't mind. Thanks, Vincent. Okay, Seymour Rivers. Yeah, hopefully, we'll be able to bring some things forward here that we can discuss and kind of have a consensus as to what's really going on. Harold B, Pablo Pina, how you doing? Let's see what else is out here. Definitely family, James Richter and all of you. Definitely family. Patrick Bateman, greetings and salutations. How you doing, Harold B? Appreciate that. Henry. Okay, so we'll get started in just a few seconds or so. I'll get another sip of coffee, and it is daylight savings time. So we got an extra hour of sleep. I'll see you guys shortly. So hello again. Welcome to another edition of Silver Bullion Television SBTV. I am your host, Patrick Vieira. This is our weekly live stream. Glad you all could be here. And again, welcome one and all. Thank you for being here. If you are new, go ahead and type in new and where you're from, and we'll see if we can go ahead and acknowledge you. This is I don't want to use the word community, but it sort of is a community. But more than that, we try to pass on info where we can all grow and learn and grow together, because these are definitely interesting times where we need to understand what's going on. No better way to do it than collectively as a group. Upcoming guest, we are going to have one of the best. That's going to be Chris Powell. Hang on, something. There you go. I don't know why I'm having a delay here, but as always, you can find us on social media. Silverbullion.com.sg is our website. Yes, we do sell silver, gold, platinum, palladium, things like that. You can store it with us. We do have our own vault. We are not a third party vault. So when you store with us, you are also dealing directly with the people who are storing your metals, unlike a third party vault. This is a definite advantage for you in that we are the ones that go out and get the best types of insurance that you can have, one of them being mysterious disappearance. So again, do hope you come to our website, see what's going on there, and more than anything else, we do specialize in systemic wealth protections. These are the times you really do want to be looking into that. Facebook, Silver Bullion SG is where you can find us there. Twitter, Silver Bullion PL for private limited. Audio only versions, bit.ly, SBTV iTunes, SBTV Spotify. We are also on Instagram. I need to find that Instagram logo and URL or handle anyway. So I'll get that up for you guys. Sorry about that. We are on Instagram and Telegram. This group is particularly interesting. This is where Vincent and I will go ahead and go through news items, financial, economic, precious metals, all these various types of news, and we'll try and post something that may be pretty relevant to us and is pretty true to us. So we will definitely jump in the bushes, sift through the weeds, get dirty for you, and try and pull out some nuggets of information. Crisis tracker, one word. You can search it on the Telegram app. One word, crisis tracker. So t.me/crisis tracker. So we do hope to see you there in that group. And again, upcoming guest is going to be Chris Powell from the Gold Antitrust Action Committee, otherwise known as GATA. Spoke to Chris a little bit last week. He is feeling a bit under the weather, so hopefully we can get this interview done this week and have it posted as we normally do with our weekly interview post. So let's hope Chris is feeling better. Chris is the Secretary Treasurer and Director from GATO, the Gold Antitrust Action Committee, and hopefully he'll be joining us. He was the managing editor of the Journal Inquirer, a daily newspaper in Manchester, Connecticut, from 1974 to 2018 when he retired from his management work while remaining the newspaper's political columnist. And I think, as you folks know, he did move on into Ghana, and he's been really, trying to shed some light on what's going on in the shadows of the gold industry, whether it be on the comics, educating people, such as what went on with the London Gold Pool and things like that. So I do hope that you do make it to this interview with Chris Powell. So do subscribe and hit that bell so you can be notified when it comes up. And thumbs ups are always appreciated, as are you, where we want to give you a $10 Amazon gift card. I think there are 3 more of you from last week who won. We're waiting for you to email us at sbtv@silverbullion.com.sg to go ahead and send that gift card to you. But nonetheless, if you'd like to win it, be one of the first 5 to answer a question from a past interview correctly. In this case, it's going to be Warren Black, and you have to answer it. Answer it in this live stream. You're going to have about 1 minute and 30 seconds to do so. US winners, you're going to be given a link to download the gift card. Non-US winners may have to ask Amazon, hey, can you work something out with me, because I can't use this gift card in my area. But Amazon is usually pretty good about that, so no worries there. And provide us an email during this live stream. Again, that'll be sbtv@silverbullion.com.sg. So we'll go ahead and we'll ask that question. And it is coming from the Warren Black interview, where he says, when it comes to the reset, I find it very hard to believe that there will be blank currency. Warren Black says, when it comes to the reset, I find it very hard to believe that there will be blank currency. So I'll be looking for your answers. Vincent chiming in, join our Crisis Tracker Telegram group. There you go, t.me/crisis tracker. There you go. Let's see what else is out there. Ernest Blackmore, how you doing? Ventura, California. Not sure I know. Not California. All right, California. Yeah, I was thinking, hey, Ventura's California. What's coming? Okay, I get it. All right, Patrick, drink more coffee so you can catch on to people's jokes, because people here can be very funny and educated at the same time. All right, so looking for that answer from Warren Black. Rod Panhard saying digital. Peter Frowine saying any 49 fiat. Ernest Blackmore, okay, digital from Peggy Moore. Fiat, Patrick Bateman. CBDC, Pablo Pina, digital. Fiat, digital. Okay, so far no one's got it. It's not digital, it's not CBDC, it's not fiat, it's not any of those. Okay, you might be disappointed when you find out the answer, but anyway, nonetheless, the answer is one. And what he was trying to say is he does not see where there's going to be one currency. It's his opinion. I can understand why he says it. And then there are those of us who do think, hey, there is going to be one type of a currency. But let's go ahead and revisit what Warren Black from the Global Wealth Club said.
So I do think you'll see lots of resets happening across the world. I think you'll find some blocks will go one way, some blocks will go another way. Some blocks might just go off and build their own little sovereign kingdom. That's more what I see likely to happen. But I think the very, very universal outcome will be digital currency of some form. Like Australia might have a digital dollar. US might have a digital dollar. There may even be an agreement that the Western bloc say, yep, we will accept it as, any US dollars we'll accept for Australian and vice versa. And then Asian countries might say, well, we're going to do this version of it or whatever else. I mean, I find it very hard to believe that there'll just be one currency that every country in the world will take. But then again, the vaccine basically did that kind of stuff. So that said, I think people's health's a bigger fear for them. So I think the more likely outcome is, I think you'll find that there will be some kind of universal reset happening, but there will be different countries responding in their own different ways.
All right. So Warren Black, I guess you could say he's looking at some form of, and we talked about this before, where globalism is failing, and it looks like it's going to resort back to some type of regionalism, and in that you will have perhaps different types of currencies, albeit digital currencies, but he doesn't see it being just one currency. So he does see resets all over the world. I think probably all of us do see that. And he sees blocks may be created. And again, this is the political geopolitical chess game that we're seeing right now, where the pieces, they are moving on the chessboard. Be aware of it, be aware of how the pieces are moving. And this is why he sees where you may have a different type of currency throughout different parts of the world, as opposed to just one currency. Although it all may be digital, it won't be perhaps just one type of a world currency. Uh, and again, one global currency, not likely. A universal reset will happen, but different countries will respond in different ways. So, what are your thoughts on this with what Warren Black said? So, I'll be looking for your thoughts. I just want to run through a few comments here, see what you were saying. Uh, Project Project Yaris. If Republicans take back House and Senate, do we stop stacking? I mean, I think we all have to come to some type of an understanding that it does not matter. It does not matter, left, right, red, blue, whatever it may be, Tory, Labor, whatever it is. It doesn't matter. There are no good guys. There are no good guys. We do know, we are in this transition in our monetary system, and that neutral reserve asset that looks to get all of us through is going to be gold. Looks like it may be silver as well. It's not financial advice here. It's just things that all opinions, nothing here professional or otherwise, all opinions. So it doesn't matter, in my opinion anyway, and I think a lot of people as well, who actually wins anymore politically, because we are seeing central banks moving us in a different direction. Another clip from Warren Black.
I mean, people say it's artificially manipulated. Look, I like to always take the simple answer as my approach. The simpler, the better. I think if I had to guess one thing, it is still a lot of people may not believe in the monetary system, but they hope it's going to keep working because they don't know any other alternative, and people like stability. People keep eating at McDonald's even though they know it's not great for them because it's stable. They keep going to the same hairdresser because they've got security. They stay in the marriage that they're not happy with because they've got security. They keep going to the same cafe, because we're creatures of habit. So people, although they know there's a problem, deep down they don't want the system to end. They want to keep going. They want to keep spending money in the current things, and they want to stay secure and don't want their life to be upended. I think it's that simple. Well, I think once people realise that it's not going to be like that, I think it'll just go.
Gotta like that zoom. Gotta like it. People like stability. That is true. I mean, we've talked about this before, where we will give up things for stability, for convenience, in some cases for peace. We will give it up. People like security. People are creatures of habit. Yes, we are. We know things are wrong. We still do them. McDonald's is a perfect example. McDonald's don't sue us here, but well, anyway, moving on. People don't want their life upended. No, we don't. Again, we're looking for some type of peace, stability, and we make compromises in order to get it. But when we realize they will not afford these things, we're not going to be able to afford all of these things we want. Things like gold and silver are going to move fantastically, and that is because we're going to see that governments are changing, central banks are changing, and we're going to be looking for that stability, security. We are creatures of habit. We want those, and we're not going to be looking towards government perhaps to give us those things. We're going to understand that we have to have some type of financial freedom, where it doesn't necessarily mean boatloads of money. It means having some type of money, perhaps a little bit outside of the current financial system, because we are going to have to be able to take care of ourselves. As I say, always be a blessing, not a burden. Let me take a look here at a few more comments. Um, yeah, in fact, Henry, correct. Jay Powell, he's already said, there can be more than one reserve currency. He's already said this, so the groundwork is being laid. You listen carefully, listen closely, dissect what people are saying. They are telling you. They're telling you exactly what's going on. Okay, so moving on, one more clip from Warren Black.
The world's in a very, very interesting place. I'm watching with fascination and just watching the trust in government at all-time lows. Even people who are very pro-government, who trust government anymore. Even like my own family, who always been very trusted in government, they still do, but they have reservations now. I mean, I do believe that law and a good and a stable government is important for a stable society. You know, having laws that people acknowledge and honour and follow is really, really important. And when laws get really bad, citizens start questioning them, and when they keep getting bad, they stop following them. And we're in a very alarming stage for me where people are no longer taking law seriously. But the more they try and stop it, the more it'll spring up, and eventually they'll just buy into them. And I think you'll find digital currencies will take off. Central banks will kind of become less relevant, but they'll still have their hand in there by being smart enough to invest in some of these other things. That's my feeling. But I definitely see the role of the central bank as we know it ending. At the level of power. There's a book called The Sovereign Individual by Rees, Moggs and Davidson that predicted that the nationalisation, the big national state would break down. And I see it happening now. And we'd move into smaller sovereign communities, people relying more on each other. Yeah, so that's definitely where we're heading.
All right. So Warren Black, trust in governments is at all-time lows. This is exactly what we were talking about. People have reservations with their trust in government. People eventually stop following bad laws, and we are starting to see these things popping up, all over the world right now, where people, they're not wanting to follow these laws. They're not even believing the results from elections anymore. They're not trusting their governments, where they feel there are certain levels of elitism in their governments, where they are doing well, where the population, the citizenship, is not doing well. They no longer take the law seriously. Digital currencies will take off. Central banks will become less relevant. And this part, it's really a double-edged sword. Digital currencies. I mean, you have that convenience, which is what we talked about, but then again, you may be giving up a bit of your privacy, because it seems like the road that these digital currencies are on, it's really about getting more information, more data from you. In some cases, that means tracking you a bit more. What are you buying? Things like that. And it may lead into all types of other things. So it's a bit of a double-edged sword. Some people like it, some people don't. What are your thoughts on all of these things? I'll be looking for your comments here. And I'll move over to Gerald Celente's Trends Journal. I'll go through his weekly message, the Fed looking to slow, and of course, recession. The mythical recession that has yet to come out of the words of the mouth of the Fed to say we are in a recession. But anyway, nonetheless, Gerald Celente's weekly message: accusation, counter accusation, rinse, repeat. The war in country U is another turning point into a propaganda race, and the West is perfectly content with treating any statement out of Kyiv as the gospel truth. Countries are military warned Western countries that the country U is attempting to produce a dirty bomb, which is a conventional explosive laced with radioactive material. I hope YouTube algos are okay with that. The Kremlin even provided areas where it said these bombs were being developed. But country U denied the allegation and said if Moscow was making such a claim, clearly it is the Kremlin planning such an attack. The US, like clockwork and maintaining its decades long hatred for country R, sided with CDK and denounced CDM in country R. The US Secretary of State Antony Blinken said the world will see through any attempt by country R to use this allegation as a pretext for escalation. U.S. intelligence officials have told news outlets that throughout the war, country U has not been forthcoming about its war losses or future plans, which raises the questions of how Washington can be so confident that country U is not planning such an attack. Now, heating up the war talk, the Wall Street Journal reported the U.S. and Saudi Arabia are on high alert after Saudi intelligence reveals that Iran is expected to carry out an attack on targets in Saudi Arabia. America's Air Force Brigadier General Pat Ryder said, "We will reserve the right to protect and defend ourselves no matter where our forces are serving, whether in Iraq or elsewhere. Yes, World War III has begun, and if we do not have peace, we will die in war." According to Gerald Celente, his weekly message. As always, Gerald does not hold back. Wages. Sorry, I need to touch on wages here. I think I had the wrong topics posted, but wages in September. The personal consumption expenditures price index, the U.S. Federal Reserve's preferred gauge of inflation, rose at 6.2% year on year. The core index, which ignores food and fuel prices, ended up from 4.9% in August to 5.1 in September, its fastest climb since March. During this year's third quarter, workers' compensation also rose. The employment cost index, which measures workers' overall pay and benefits, was up 5% from a year earlier. And the U.S. Labor Department reported down barely from its record clip in the second quarter when it climbed up the fastest since March of 2001. The service workers gained the most at 7.7%, with retail, leisure, hospitality, and nursing also showing strong improvements. Employees in financial management professional services saw the smallest bumps adjusted for inflation. The private sector workers' pay declined 2.7% in the last quarter from the same period in 2021. However, because workers' compensation grew little during the second quarter and inched down in the third, some analysts see the figures as a sign that we are moving past the firmest period for wage inflation, according to JP Morgan. So that means looks like wages may be coming back down. Expect a pivot. Consider this. For many months now, central banks, including the Federal Reserve and the European Central Bank, have been aggressively raising rates. We're seeing this. Now, the narrative of central bankers is this: by raising rates, this will slow the pace of skyrocketing global inflation. Well, to date, central banks' raising of rates has been totally and completely ineffectual. And why? Because it was never meant to work. The central banks raise rates to hit demand and slow the economy, not to slow inflation. But this is the general lie currently being sold to an unsuspecting and uninformed public. Now, how could central banks actually slow or even stop inflation? They could contract the money supply by raising the capital reserve requirements of the major banks. The root cause of surging inflation is not a rate issue, it is a money supply currency issue. Now, currently and collectively, central banks are deliberately killing the purchasing power of their respective currencies. Despite all this, we should expect a few things to happen. Firstly, more propaganda. Specifically, the narrative will change from inflation is worsening to inflation is slowing. And this will be followed up by central banks, and I believe that it will be the Fed first, which will so called pivot from an aggressive rate raising stance to a less aggressive stance, and then eventually a pause. Now, understanding any so called pivot will do nothing to prevent the root cause of global inflation from abating. The global money supply will continue to grow. With the current situation, I would say that a December pivot is likely. All right, so some interesting things there, and we will check our bond yields rate. Before that, let me take a look at a few comments here. James Richter, yes, just just buy more metals. Buy more metals, absolutely. Let's see what else is out here. Um, Mr. Razor, that general should speak for himself. You know, I tell you, there's just so much division, and I think it's always good to have different opinions on things, but I've never seen such heated opinions on each side. It's pretty troubling. I've never seen this happen this way in my lifetime, anyway. Henry, inflation is a monetary phenomenon. A recession won't stop inflation; it will only prolong it. It's a great point here. And Patrick Bateman, Papa J, wrecking the global economy. Well, yeah, I'd have to agree there. So let's see if this kind of verifies it when we take a look at the yields, how the bond yields are rising, and how we are seeing the flattening of the curve. So here we go. January things are still good, sort of good, and we're just going to watch it as it progresses through the current time frame up into November. So you can see how this yield really does change. It really does rise. It really does flatten, and it really does invert. So go ahead and enjoy the show. Okay, let's see what else is out here. Yeah, Carlos. Yeah, great. UK they raised gilt rates Thursday and Friday, and well, okay, so it went down. All right, got to look at that. UK in a debt spiral right now. All right. So anyway, there we see October rates are really up there. November rates have really gone on. And I don't have this on the chart, but I noticed that the Fed has included a 4 month. They even have a 4 month a yield now. So I don't know where that came from, but it came from about a month ago. I think they started this 4 month, but I didn't bother to include it in this chart. But you can see there's definitely you see how it is inverting here. Uh, you're seeing even a 3 month almost at the same rate as a 30 year. So it's not looking good. It's really not looking good at all. Anyway, we'll take a look at our website silverbullion.com.sg. Keep things going, and we'll see how things are here. Let me refresh, see how gold and silver are doing this morning in Asia. Silver is still above $20 at $20.55, although it is taking a pretty good downward hit right now, down some 38 cents. Gold is down almost $9. So both metals, after a really great run at the end of last week, under some pressure here this morning in Asia, even platinum down some 11.25 at 959.25 an ounce. So platinum to me is still pretty interesting because it's almost, well, once upon a time it was valued higher than gold. Now it's roughly, a little bit more than half the value of gold. So platinum, it's pretty interesting to follow. But me, I'm silver all the way through and through. Silver to gold ratio 81.4. We were just at 85, 86 last week. We've come down to 81. So that ratio did have a good pinch where it came down a bit. Again, what this really means is if you're looking to buy precious metals, gold and silver, you don't know which to buy. Should I buy gold or should I buy silver? A silver, the gold silver to gold ratio is a pretty interesting thing to look at because usually when it is above 80, usually when it's above 80, it does signify that it's a good time to buy silver, meaning silver is priced, it's undervalued in price relative to gold. So that usually is an indicator that perhaps you may be looking at silver. And then this ratio will move. It'll go to 100. It'll come down to 50. I mean, it'll just move over time. And then what people do is they will flip silver to gold, gold to silver in order to obtain more metals throughout time. Featured products, we do have a good bunch of Britannias here, both silver and gold, along with Maples, 1 kg gold bars, and of course LBMA bars. These are pretty popular. They have the lowest premiums when it comes to silver. So anyway, we are seeing silver premiums still relatively high, but there you know are items like these LBMA bars that the premiums are a bit less. So for our local customers, you can pick these up from the shop. 3 bars available. Bring your trolley. As always, this is one heavy guy. Storing about 292. I think we were at about 350 or so just last week. So there's been a move on these bars. People have been buying it up. Usually for some reason when silver is low, we see people kind of they delay their buying, and then once silver starts moving, and then they have a tendency to chase and then jump in and buy it once it starts moving up. So it's good to get it when it's down. If you'd like to get these, and you are outside of Singapore, you need to sign up as a Silver Bullion. You'd have to create an account. We have 6 types of account: personal, joint, trust, joint account with a minor, business account, and a retirement account. I urge you guys, if you have a 401k, self-directed IRA, whatever it is, to contact us, or you can contact me through sbtv at silverbullion.com.sg, and we can go over, or I'll try and get you information. I will pass you information on retirement accounts, because I do think these are important. I think the average person right now in their 401k has somewhere around a million or close to it, and the thing is, you want to make sure that that purchasing power in your retirement account stays, especially in these 401ks, because as time goes forward, you don't want to lose too much of that purchasing power. And if fiat currencies do get in trouble, you surely do not want to be, entirely in fiat currency. So you should consider diversifying it into perhaps something like a precious metals account. It can help you with this, for sure. So sbtv at silverbullion.com.sg. Go ahead and email. Vincent and I will end up getting that email, and we will go ahead and we will help direct you to what you need to do, or help you to understand it. Easiest account though is a personal account. Basic information, we just need a form of an ID. Typically people will supply a passport as an ID, and just go out and fill out the application, and that's it. Straightforward. We'll go ahead and do our checks on our end, and be sure to put SBTV. This really does help us out quite a bit. um, and again, if you have questions, email us also, sbtv at silverbullion.com.sg. We will help you out there as well. We'll do what we can for you. So moving on, I want to take a look at Twitter real quick. Some things that I bookmarked. Uh, Retail gold insights in Thailand from the World Gold Council. How do investors in Thailand feel about gold? Let's take a quick look. I mean, how do people in different parts of the world feel about gold? Thailand is one of the largest markets in ASEAN. This means the Association of Southeast Asian Nations. So Thailand is one of the largest gold markets within ASEAN. So they took a look at 2,000 people's opinions, what they had to say, and gold is held primarily for security. This is why Thais buy gold. They understand gold is held primarily for security, but also for profit motives. So again, pretty much like most parts of the world, uh, but what we see now more and more is it's not just the investment component of why people buy gold. They are really starting to understand the security of buying gold, the hedge that it is. Main role of gold as an investment: protect my wealth. Okay, so this survey in Thailand, most people buy gold to protect their wealth. Of course, the market has the potential to expand. Uh, so let's see if there's anything out there. This is interesting also, digitization. This is what people are looking for. Uh, the investors would benefit from greater digitization of the gold market. So this is something to keep in mind, because even within the LBMA, they are looking at ways to digitize gold in order to help gold move around from place to place. So that is interesting as well. Lynette Zhang, gold is the only financial asset that runs no counterparty risk. Hold it, own it. I will never argue with anyone who feels that way. There's a large part of me feels that way as well, but I will say, after living in Singapore close to some 20 years and understanding how silver bullion works, I would feel very comfortable in knowing that it is important to not just diversify assets, but also location of assets. And I would feel very comfortable knowing what I know about the company, and how we operate and do things. So I'll never argue. If you want to hold it, go ahead. If you're looking to diversify, again, email us. We can help you out with that, and understanding why people actually why they do it. Dave Kranzler, I'm not sure about conditions could be any more bullish for silver as it is, but this just added rocket fuel to potential upside. And that is, of course, I guess, Jim Cramer. The people always seem to say, hey, just go opposite of whatever Cramer says and you'll do fine. Kramer issues a sell alert on silver. More downside, more downside ahead for the metal. And so, of course, that told everybody to start buying, start buying silver. Go opposite of what the mad money guy has to say. Lawrence Lepard, one of these things is not like the other. This is interesting, because when you look at this central bank gold demand this year, 2022, look at how much they are buying. Central banks are buying more gold now. So that's something to keep an eye on, right? These central banks that can go ahead and print all the money they want, instead they're looking to buy gold. So that should tell you something. Rob Keynes, if we were to over tighten, we can then use our tools strongly to support the economy. This is what Powell said. We'll take a look at that afterwards. And again, one more thing Jim Cramer said here. This is very concerning because this is what we often talk about with the mainstream media and how they turn into mouthpieces. So I'll go ahead and play this for you.
To start moving. And they got to deal with, what do you do if you told people the way to beat this is no vaccine, and now you have a vaccine? So I think what you need is a propagandist. Outside of the state infrastructure. Exactly. To start moving political opinion. But I think when we think of propaganda, we think about other regimes that we didn't really appreciate. You're mighty silent.
I am silent. I'm just thinking about those poor people stuck at Disney, Shanghai Disney for.
Okay. All right. Enough with that. The point being, this is coming from mainstream media where he's talking about, hey, we need to do some propaganda on the private side, private sector propaganda to push things. Now, I don't care exactly what the topic may be that you're trying to push. I care more about that. This is the mindset of mainstream media to be propagandists. This is troubling to say the least when he talks about uh needing propagandists to push issues. Not good, not good, Jim, not good at all. Hedge fund giant Elliott warns looming hyperinflation could lead to global societal collapse. This is a true concern, very, very true concern. Let me see if there's anything else there. Okay, so let me end this here. That'll be the end of Twitter. We'll start heading on to our topic of the day, where the pain of Powell continues. I just want to take a look at a few of the comments here before we go on. Um, yeah, Patrick Bateman, exactly. Propagandists. I mean, what is this? We're just supposed to get news from these guys. But what is this whole propaganda thing? Um, anyway, let's see. News drifter, how is digitizing gold different from the gold-backed CBDC advocated by the World Economic Forum? Um, that's a great question. Um, if you have, let's say, a gold-backed token that you can transfer to someone, or purchase something, then you are at least outside of that CBDC system. Remember now that the CBDC system more than likely is going to be something that in time, will probably eliminate cash and coin. And that'll be more or less, they will have full observation of what you're doing because you're transacting through their system. uh, we need to have ways to transact in our system, one foot in and one foot out. One foot in the system, one foot out of the system. So it's more in your control. If you have, something like our, I just said something like our cash gold back token, it's more in your control. You can buy these by the gram. It's divisible up to 8 decimal points. You can transfer it. I mean, I tell guys all the time, if you think we may come to a point where you may have to use your gold to barter, well, how do you get your gold, to someone in California if you're in New York? How do you get your gold to someone in Australia if you're in Egypt, let's say? How do you get it? It's very difficult to move, but if you have these types of tokens, you can go ahead and just transfer it over. And with things like our cash gold back token, you can actually see it. It's there. You can actually see what we have. You can actually see the serial numbers on it, and it's all accounted for. So there. I mean, it runs parallel. Maybe at best I could say it runs parallel to a CBDC system. Let me take a look at a few more comments. Carlos, yeah, get your medals now. I mean, even though they're going a bit down, you know, I would say, definitely take a look at getting medals. Okay, so Jay Powell, the pain of Powell continues. All right. So Jay Powell recently spoke at the FOMC meeting, and we saw a 75 basis point rate hike, and no talk of stopping, but he did talk of slowing. So we'll take a look at some key points. Although the real question in all of this are the Fed's actions about taming? Is it about taming inflation? I mean, as we just saw in Gerald Celente's Trends Journal, this is about taming inflation. You wouldn't be going at it bit by bit. You would be taking big bites. You'd be taking big bites out of it, trying to get the inflation down. This is about, according to Gerald, this is about currency. This is a perhaps a full blown currency crisis right now, where everybody's currency is just really, starting to debase in a bit. As Jim Rickards once said, currencies are in a race to the bottom. They're all in parachutes, race to the bottom, and it just so happens that the U.S. dollar is the cleanest currency in a dirty laundry basket. Anyway, these are stories for another day. So we'll take a look at some key points. Although the real question is this about taming
Good
inflation?
afternoon. My colleagues and I are strongly committed to bringing inflation back down to our 2% goal. We have both the tools that we need and the resolve it will take to restore price stability on behalf of American families and businesses. Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
Okay, so Powell says 2% inflation is their target goal. He's been saying this forever. We have the tools, he says. Price stability is our responsibility. Price stability serves as the bedrock of our economy. These are things that he said. Now, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all. Okay, so in other words, without that price stability, or he's saying we're going to sacrifice some of this price stability in the name of jobs. You're going to give up your job. Some of us, anyway. But will Powell get to that 2%, or how will he get to that 2%? Probably more important. So I'd like to know your thoughts on these. Me personally, I see the Fed, they're not going to get to that 2% unless the system is gutted and overhauled, meaning we go into a new type of monetary system. Maybe. He's going to try and pinch the pain away by slowly raising rates. You can't. You got to take bigger bites out of it. You need to go bigger, but that's going to hurt the economy. We know this as well. It won't work, and the wheels are going to come off. And by raising rates, if you're just going to pinch inflation bit by bit, inflation's just basically going to laugh it off. It's going to laugh it off while real people are going to get hurt, and inflation will continue to outstrip your paychecks, your mortgages. Jobs will be automated. Jobs will be lost. This reminds me of what I saw back in 2007ish. I think a lot of us saw this, where people lost their jobs and they went back to school to retool. All right. Everybody went back to, not everybody, but a lot of people went back to school to retool. They took out student loans. Some were able to find employment to pay off the loans, and others were not. And when the Fed uses their power to implement their responsibility of price stability, people get laid off, people lose their jobs. And also at that time, government made it very, very easy to go to college, to go back to university. So this was a time where people were hurting. They were hurting, and they saw that, hey, I can get back to college, or maybe I should try and get a degree to better myself, to better my future, better my family's future. I think a lot of good intentions were out there in the beginning. Remember, this was a time where we had to qualify to go to college, right? We needed these good grades, these good SATs, and colleges and universities took in the best and the brightest. And students had to compete, and a degree meant the world, right? Now, universities knew with the guaranteed government check, they could raise tuitions, and people had a dream of having a degree, bettering themselves, and being able to leap out of the financial storm that was brewing. Instead, their debt and the nation's debt grew. Jobs were still hard to come by. Many ended up in a worse financial shape, but so did the government. You go back and you look at 2007, 2008, when QE started, how much money the government's printed. Government has their own debt as well. The housing and financial crisis of that time it's barreling down the tracks again. And there may be no stopping it this time. It's a very, very different situation. So here's more of what Jerome Powell said.
Inflation remains well above our longer run goal of 2%. Over the 12 months ending in September, total PCE prices rose 6.2%, excluding the volatile food and energy categories. Core PCE prices rose 5.1%. And the recent inflation data again have come in higher than expected. Price pressures remain evident across a broad range of goods and services. Russia's war against Ukraine has boosted prices for energy and food and has created additional upward pressure on inflation. Despite elevated inflation, longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households, businesses, and forecasters, as well as measures from financial markets. But that is not grounds for complacency. The longer the current bout of high inflation continues, the greater the chance that expectations of higher inflation will become entrenched.
And when he starts at clearing his throat, we got issues. Anyway, Paul says inflation is still running high. Okay. Inflation is Russia's fault. It is Russia's fault. The algo should like that one. Inflation is Russia's fault. And he did not even mention money printing, made no mention of that it could possibly be their fault. And there you go. Long range inflation, well anchored. The longer high inflation continues, the more likely inflation will become entrenched. So, what are your thoughts on this? The longer high inflation continues, the more likely inflation will become entrenched. So, the Fed, they still don't take responsibility for causing the inflation situation. Everything will always be country R, country R, country R, country R. So, therefore, why should I or anyone genuinely believe their goal is to bring inflation back to 2%? I mean, what the Fed, to me at least, is attempting to do is to bring inflation down to, let's just say, 5% and have that 5% become the new normal. In other words, 2% is gone. 2% is gone. They are looking for a new target. I think we're going to settle into a number above 2%. The Fed's going to claim victory on this, where they stopped inflation, slowed it down, brought it down. And then I do think, we're going to have to adjust, to a above 2% type of inflation target. So let me take a look at a few comments here. Let's see. John Bethel, true. The government will find a way to blame us for everything. Yeah, I think so. I think so. All right, so let's move on here.
Today, the FOMC raised our policy interest rate by 75 basis points, and we continue to anticipate that ongoing increases will be appropriate. We are moving our policy stance purposefully to a level that will be sufficiently restrictive to return inflation to 2%. In addition, we're continuing the process of significantly reducing the size of our balance sheet. Restoring price stability will likely require maintaining a restrictive stance of policy for some time. I will have more to say about today's monetary policy actions after briefly reviewing economic developments.
I told you, whenever he does that clear the throat thing, something's up. Anyway, raises the effective funds rate 75 basis points, another 0.75%. In the process of reducing the balance sheet, he's in the process of reducing the balance sheet. A price stability means restrictive policy for some time. And when he says he'll need to check on more data, it's basically saying I'll have more to say after I check with Mama Yellen. Come on, Jerome. We've seen you on the podium for so long. We know what you're doing and what you're saying. The thing is, if higher food and energy prices are the blame of Russia, and if my plan, meaning Jerome Powell's plan, is to stay fairly monetarily tight, how does a tightening policy without being able to bring more supply supposed to work? How's that going to work? I mean, is the U.S. going to force Russia to bring more oil into the market? No, we can't. We just sanctioned you. We can't do that. Is the U.S. going to force Saudi and OPEC to pump more oil? wait, they might be mad at us. We just dumped a lot of oil on using our strategic petroleum reserve into the market to hold the oil price down. So, well, what are you going to do? I mean, you can't ask country off for help, and you pretty much pissed off your friends with Saudi and OPEC. So, what are you going to do? How do you plan to tighten up monetary supply, but yet your energy, other things, they're still not in the market in full force. So you don't have that equilibrium. You don't have it yet. Unless more oil, more energy, more everyday goods and products, let's say, come from China, come in, the Powell can tighten all he wants. And I'm not sure his plan is going to work. I don't think it's going to work because there has to be that balance between the amount of dollars chasing the amount of goods and products to find an equilibrium, a price the market sees as fair. So if like I'm saying, if Powell tightens monetary policy, let's say less dollars are floating around, less dollars can be spent. The thing is, less dollars can be spent on less goods, less products, less services. So you're kind of back in the same boat where you started from, unless you really start to have more products out there. You're not able to balance it off. Okay, moving on. The danger here is tightening will bring on liquidity issues for banks and businesses all over the globe. The world will love and hate the US dollar. Essentially, the world will see the bad romance it is in, and they're going to walk away from the dollar.
At some point, as I've said in the last two press conferences, it will become appropriate to slow the pace of increases as we approach the level of interest rates that will be sufficiently restrictive to bring inflation down to our 2% goal. There is significant uncertainty around that level of interest rates. Even so, we still have some ways to go, and incoming data since our last meeting suggests that the ultimate level of interest rates will be higher than previously expected. Our decisions will depend on the totality of incoming data and their implications for the outlook for economic activity and inflation. We will continue to make our decisions meeting by meeting and communicate our thinking as clearly as possible. We're taking forceful steps to moderate demand so that it comes into better alignment with supply. Our overarching focus is using our tools to bring inflation back down to our 2% goal and to keep longer-term inflation expectations well anchored. Reducing inflation is likely to require a sustained period of below-trend growth and some softening of labor market conditions. Restoring price stability is essential to set the stage for achieving maximum employment and stable prices in the longer run. The historical record cautions strongly against prematurely loosening policy. We will stay the course until the job is done. To conclude.
All right. So at some point, we will slow down. At some point, we will slow down. And decisions will be decisions are going to depend on data. Sustained period of below trend growth, softening labor market conditions, we will not prematurely loosen policy. So you look at all of these things. At some point, we will slow down. Well, if inflation is still running pretty hot or high, and you're going to slow down, again, inflation is just going to laugh it off and continue to run while real people get real hurt, real pain coming their way. Decisions will depend on data. I'm not buying that. Sustained period of below trend growth means, he's really trying to avoid the word recession. He's really trying to avoid it. Let me move on. I think I have the points here. But these were the final thoughts from Powell. Will a slowdown reel in inflation, or will inflation run away? As I said, I think it's going to run away if you slow it down too early. And he's saying he doesn't want to stop these rate hikes prematurely. Decisions are not going to be data dependent. They're not. They're going to be politically driven, politically motivated. So don't. It's just me, but I'm not buying this whole data dependent story. They're looking to appease the markets. They're looking to see what can motivate the markets to stay up. They're looking to. They're going to go ahead with whatever governments and the politicians are pressuring them to do. Economy is going to continue to slow. Jobs will be lost, and these are going to be human jobs. AI is going to take over quite a bit of the marketplace or the workforce. As someone mentioned, you may want to look at things to, if you want to retool yourself, put a tool in your hand, get a hammer, get a pair of pliers, get a wrench. If you want to retool by putting a tool in your hand, because people are going to need things to be fixed, to be built, to be made. Make yourself handy. We will not prematurely loosen policy. Means, they basically don't want to be late to the party once again. I mean, there were people who were saying, hey, the Fed should have raised rates a long time ago. They didn't. Uh, where economically things, they simply are not looking good right now. Pain is still in the cards. So what are your thoughts on this FOMC meetings? I'll be looking for some of your thoughts here. But as always, after the markets digest what the FOMC was saying, the market basically said, crap, crap, get some gold, get some silver. But will the uptick for gold and silver still hold?
Wait here. Come with me if you want to live.
That's right. Gold is saying, come with me if you want to live. There was an uptick. Uptick is getting a little bit of a brush off, but mystery whales baffle the gold market after central bank purchases. Come with me if you want to live, is what gold is saying. So let me take a look at a few comments here before we take a look at this article. Ian Myers, electrician here. Yeah, in a former life, I was a Sparky myself. Went through the whole International Brotherhood of Electrical Workers Apprenticeship program. So yes, I appreciate what you do. Let's see what else is out there. Um, okay. All right. So let me move on to this article here, where after the market kind of digested some things, in a couple days or so, we saw gold and silver really shoot up. And there was an article that came out from Bloomberg where this mystery whales fashion shopping. No, this it's kind of irritating here. Sorry about this. I can go ahead and close it, and I can say stop seeing this ad, and I can say not interested in this ad, and they'll say we won't show it again, and then they will. So here it is on this side. Fashion. Okay. Anyway, fashion is gold and silver. Mystery whale baffles the gold market after central bank purchases. Um, oh, what is this? I can't even. Well, rarely disclose. I think it was China rarely discloses how much gold its central bank buys. Uh, these darn ads. Okay. Normally, dry research report A normally dry research report jolted the gold market this week when it pointed to massive but so far unidentified sovereign buyers. Sovereign buyers. Okay, remember that there are state actors, there are sovereign buyers. Now, central banks bought 399 tons of bullion in the third quarter, almost double the previous record. I'll show you a brief chart on that. According to the World Gold Council, just under a quarter went to publicly identified institutions, stoking speculation about mystery buyers. While most central banks inform the International Monetary Fund when they buy gold to supplement their foreign exchange coffers, others are more secretive. A few have the capacity to undertake the third quarter buying spree, enough to soften the blow from investing, selling bullion as the Federal Reserve hiked interest rates. Now, with that weight of see, there's that ad again. Anyway, with that ad of selling, I was a bit surprised gold wasn't weaker, said Ross Norman, Chief Executive Officer of Metals Daily. Anyway, the World Gold Council is a lobby group for the mining industry. Let me go down here a bit. Okay, so the world's number two economy rarely discloses how much gold its central bank is buying. In 2015, the People's Bank of China revealed a nearly 600-ton jump in its bullion reserves, shocking the market watchers after 6 years of silence. And the country hasn't reported any change in its gold hoard since 2019. So do you guys believe this? Since 2019 that they have not added to their gold holdings. Do you believe that? I surely don't. But you know what? If you were considering this to be some type of a national, this is important to your nation. you may not want to disclose what you actually have. So we haven't really heard anything. So besides this, Chinese gold imports are already at a 3-year high. So we can see from 2017 2022, the year imports and the consumer demand and trade data show the country has been taking in vast amounts of bullion. China has imported 902 tons of gold so far this year, already surpassing last year's total. That's on top of more than 300 tons the country mines typically produce each year. And you got to remember, whatever is mined in there doesn't necessarily come out. And this is the thing, when you look at the central banks, when you look here at 2022, this lavenderish color is the third quarter. Almost 400 tons of gold alone was bought up in that quarter. And if you look at this chart here at the very top, we're not even into Q4 yet, and already this is really, I mean, it's going to surpass easily all the prior years from 2010 to 2021. We're only in Q3 and we're above all prior years already. And if Q4 of 2022 is anything like Q3, we are well above. We're going to be well above what central banks historically have been buying. So central banks are buying these gold, buying gold. They know that something is up for sure, and we should as well. So last article I want to show you here, this came from International Banker. Gold buying once again on the agenda for central banks. This is recent, September 28th. Okay, so central banks, it's on their agenda. They want to buy gold. I'll just look at the last paragraph here. Perhaps the most interesting part of the survey is that there is a growing consensus among EMD, I think it's emerging markets, central banks. They are concerned about shifts in global economic power. You hear that? They are concerned about shifts in global economic power. This is why, probably one of the bigger reasons why central banks are buying gold, it is that neutral reserve asset. Should currencies get in trouble, should currencies be revalued, should a new monetary system come into play, whether it's CBDCs or something else, you will definitely want to have that gold, that neutral reserve asset. Even as these countries are saying they are concerned about shifts in global economic power, thus causing them to be less optimistic about the US dollar's role as a global reserve currency. As someone pointed out, even Jerome Powell has said there can be more than one reserve currency, global reserve currency. So indeed, the survey noted that 42% of central banks or central bank respondents expect the US dollar to decline as a proportion of total reserves over the next 5 years. Less and less dollars will be used. Their central banks seem particularly wary about the greenback's role, with 45% expecting the US dollar to decline as a proportion of their reserves, more than the 31% of the advanced economies' central banks. Now, here's the thing, gold and the US dollar, a lot of people say that it does have an inverse relationship. So if you're expecting less dollars out there, and if you're expecting the value of that dollar to go down, that means the value of your gold, value of your silver should go up with that inverse relationship. But with central banks buying more and more gold, I would say through time, you're going to see people doing the same, getting more and more gold, getting more and more silver. With the world reserve currency going down in value, um, you're going to see the value price wise anyway. We're not even talking about the insurance that it gives, but price wise, you're probably going to see it go up. Again, this isn't financial advice, anything else or otherwise. It's just to say, when you look at everything going on with what the central banks are doing, um, tiptoeing through inflation. Why are they tiptoeing through inflation? You look at other central banks throughout the world, especially in emerging countries. They're loading up. They're loading up on gold with the expectations that there's going to be less dollars used, less dollars wanted. They're going to be looking for that neutral reserve asset where no matter what happens, can gold can really pivot in so many ways. It'll store the value of whatever your dollars are. So central banks, they know, they may not tell you. Guys on financial news shows, they may not tell you, but we will. We're going to tell you, and it's not just because we're gold and silver guys. It's because we have a pretty good take on what's going on, and we understand what it takes as far as wealth protection, um, as far as something to be that store of value for you. So we know what's going on. So I'll be looking for your comments here. Please do remember to like, subscribe, share, and I'll take a look at a few comments, see if I can pull some things up here. Um, let's see. Um, okay, let me go through this. Uh, Ron, don't forget their only other tool, jawboning. If Paul is not believed, the wheel they wheel out as many regional Fed heads as it takes to reinforce the message. Yeah, that is true. I think Greg Matarino puts it best. He says they will just keep bringing out creature after creature after creature, and they're gonna try and tell you, get you to do something, which falls in line with Jim Cramer saying, "Hey, we need more propaganda." Kind of falls in line. It all falls in line once you're able to connect the dots. You can really see what's going on there. So that's a good comment. Tweety Bird, I bet Elon Musk bought gold. You know what? I'm not so sure, but I mean I have no proof anyway. But why wouldn't I believe that? I have no proof. So make sure everybody out there hashtags Elon Musk bought gold. So let's get that to go viral, and maybe that'll push back up the gold price. I mean, last week we talked about algos, right, and what they may be doing. So maybe we'll do that. Hashtag everything you can gold. Hashtag everything you can silver. Yeah, Truth Monster. That one. I don't know, man. I'm like, I opened it up and I'm like, why do I keep getting these ads? And I delete it. I say, it's not for me, and then it shows up again, shows up again, shows up again. I don't know. I don't get it. Maybe the algos are mad that we did a live stream about algos last week, so maybe they're just trying to get me mad. I don't know. Anyway, what else is out there? Um, let's see. Yeah, 49. That explains the gold shortage. I've been hearing stories about gold moving from west to east. But if we take a step back, it is natural. Gold flows from west to east, east to west, west to east, east to west. But this time around, it's different. I don't know if the gold is going to flow back. And I say that because we are in a different time right now. Before, countries could not necessarily challenge the U.S. dollar. They couldn't challenge it the way they can today. So with gold looking to be the thing that neutral reserve currency that can really hold the value of your currency, uh, it may not be coming back from east to west. So I would just say if you can get it, just go ahead and get it. Again, it's not financial advice or anything otherwise. And again, if you do have a 401k retirement type of account, please do contact me. Please do contact me. SBTV at silverbullion.com .sg. I'll try and help you through it, help you understand what you need to understand, point you in the right direction, because it's easier than you think to go ahead and roll over some of your retirement accounts into a precious metals IRA. And again, the main reason for me trying to push this is because we're getting older, and if we should take a hit, we may not have time to recover. And so many people say 10% of your portfolio should be in gold and things like that. Well, with the 401k, if you do choose to take that advice, 10%, put it into gold, the thing is you're not really going to spend anything from your wallet. This is money you already have. This you already have the money. It's already there. So it's not something where you got to save to do it and pinch to do it. You already have it. The money is there. So consider doing it. And again, it's out of concern. It's out of concern because we are getting older, and uh, we have to protect what we have. And as a lot of wealthy guys have told me down the road or down the line, over the years, there's a time to make money and there's a time to protect what you made. This is definitely a time to protect what you made. Let me look at a few more comments here. Um, let's see. Yeah, I heard something about this. I got to take a look at it a bit more. Dutch talking about revaluing the price of gold as many other governments. We'll take a look at that for sure. See what's going on with it. I've been hearing some of the birds are chirping about this. William PMCD, if gold is 50K, what happens to the silver price? If gold moves up that much to 50K, um, I would imagine we're definitely in triple digit silver. Without question, we should be in triple digit silver. I don't know if we'll be in 4 digit silver, but if gold went to 50K, without question, we'll be in triple digit silver for sure. And again, if gold went to 50K, something really must have happened in the world for it to go to 50K. Um, I don't think we'd be measuring it in really a dollar value anymore at that point. We'd be looking at perhaps something like a commodity to commodity basis where I've been saying, a guy may need cash. If he got a 50K, cash is in trouble. And he's gonna need cash. He's not gonna sell his house for cash because cash is in trouble. What would he want? He might want something like gold. Well, how do you get your gold to that guy? If you can buy his house, he's willing to sell his house for gold, willing to sell it to you for your gold. Well, how do you get it to him? So this is the part about if we may not like digitized gold, but we do need a portion of it, perhaps digitized in order to transfer it over, to move it around. So I'm not saying everything, but I am saying also consider having a part of it to be able to help you to move around. So consider that also. I know it's not an easy thing to think about. Let's see more comments here. Peter Peter Schiff is a god. Okay, all right. I'll let people have different opinions on that for sure. But I think Schiff is great. So anyway, let me move on to commentary here. Politicians surely want to steer Paul. Paul is trying to show independence, yet has to appease both banks and politicians. Nowhere in this equation, nowhere in it are you and I. We're just basically subjects that are going to be pandered to. So again, get yourself some financial freedom. And my definition of financial freedom is having money free from the system. Being free from the system means Powell cannot raise or lower rates on your money. It means he cannot inflate it away. It means having a free form of money that the world acknowledges the properties it has as being money. Uh, add a couple more things here, but I think we'll just stick with the comments from you guys, and then we'll wrap up. Rod Panhard, the petrodollar is dead. If the U.S. is making it clear, oil will play no part in there. Okay. I think the petrodollar is dying, for sure. The players that were involved in the petrodollar are no longer as tight as they once were. You got to remember, it, a big reason why the petrodollar came to be was because those countries in OPEC were going to depend on the U.S. for their protection. Well, there are other countries that can protect those countries in the Middle East now. And there are other countries that want to do business with the Middle East. And these countries are not looking to weaponize the dollar, their currency. They're looking to do business. So mindsets start to change, and with that whole petrodollar, it's kind of one of the only things the US has going for it. If that gets taken away, uh, big trouble for the dollar. I mean, I know a lot of you guys will equate this with what we saw happening, with Iraq, with what we saw with Libya. Um, I'm not one who will deny that at all. I mean, like I say, if you lay all the dots out on the table and you try to connect them, they will lead you to places. They will lead you to places for sure. Let's see. Neil's Han Dynasty, he's saying 1 to 15, it would be 3,500 an ounce. That would be silver if gold were to get to that 50,000. That's a pretty penny, considering we can get it right now at, even though the spot price is 20, but we're really paying 30, 35, whatever it is, still a bargain, which is why you often hear me say, you know, is the spot price wrong? have metals actually bifurcated already, where the physical price is actually separating from the spot, the paper futures price. I mean, it has to at some point. You can't stay the same. So maybe at some point in history, we're going to look back at this time frame and see that this was when the physical price separated from the paper price, paper spot price. Who knows? But that's a pretty penny there, 3,500. Let's see what else is out there. Neil's on Dynasty, so 6K could happen. Anything can happen for sure. Um, that would be nice. I know a lot of you guys out there would be happy. Um, let's see what else is out there. Yeah, William, Netherlands may be prepping for resuming the gold standard. I've been hearing this. Various countries in Europe, in fact, they've been kind of trying to spread the gold around through Europe. So when they do, if they do come back to this type of a certain type of gold standard, then the countries will kind of, not necessarily be equal, but it's more possible. It's more possible for some type of a gold backing to happen if they do that. Uh, that is something that I've been hearing as well. Um, let's see what else is out here. Ernest Blackmore, keep metals down, so more to buy with fiat currency. Absolutely. Uh, let's see. 401k is now a 101k. Yeah, guys. I mean, again, this is your retirement. We're getting older. We may not have time to recover. Really take a look at uh, understanding a bit about a precious metals IRA, self-directed IRAs. Again, shoot me an email, sbtv@silverbullion.com.sg, and I'll try and get some information from you if you are curious about it. Um, okay, so I think we're pretty good. I guess I could wrap up here. Vincent, if there's anything you want to let people know, chime in, chime in. And so yeah, Vincent's back from Australia. He's telling me some pretty interesting stories. What he saw there. I'll let him explain. I don't want to, I'll let him explain it one day if he would like to. I thought there were some pretty interesting stories with Australia. A lot of gold in Australia, that's for sure. So anyway, let's see. Um, okay, Jay, is there really less silver available than gold? Well, I tell you what, that depends on. I don't want to say depends on who you talk to. I'm just going to go off of what we hear miners saying. Where as far as above ground silver, um, they're looking at a ratio of about 9 to 1, 8 to 1. So it is lessening. It's lessening. So I wouldn't say less silver available than gold, but I would say the silver is lessening relative to gold. So that may be something to keep an eye on, especially again when you look at something like that silver to gold ratio, which is basically a price ratio. It's not the ratio of the Earth's crust ratio. So if it ever gets to that where the metals are revalued and they go to a crust ratio, some guys say you may come down to that actual 8 to 1. So whatever the gold price is divided by 8, that's your silver price. So some guys even say that as well. So anyway, I tell you what, I'll wrap it up. Um, Let me know if you guys would like to have just more simple like Q&As. Maybe just go over some news items and Q&As if that would be easier to digest than these lengthy live streams. We want to make things work. We want to keep people interested. We want to keep people engaged. We are really in some interesting times. I hate saying interesting times, but we are in a time where we need to understand more, get more info, digest the info better. So, you guys let me know what will help you guys. But with that, as I always say, be a blessing, not a burden. We're going to need to help people out there. Your comments are the best thing that people can do to help people who are on the fence. And as always, saddle up for what's coming ahead and silver up as well. Vincent is signing off, and I'll be signing off too. I'll see you guys next week. Take care of one another.